Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back on the show.
Always great to be with you, Michael.
My pleasure. I've got a lineup of questions in the shout box waiting for you to show up here today. Let me start off with the first one, okay?
Sure.
All right. It's from Nevada, and he says, "Howdy, Michael. I'm riding the fence today. My question for Nick is your take. He wants to get your take on how high will the dollar go and for how long."
Well, it's funny because I wanted to talk about the dollar today anyway. So what I'm looking at, if you're looking at the U.S. dollar index futures, I think the dollar has a little more upside before it stalls out, probably around 80.60 to 81, just in the near term. But ultimately, I think the dollar, if it can get above 81 with some volume, I think it goes to 84 over the course of the next few months.
Okay, why do you think that? That's a good question.
Well, right now we've had a pullback in the dollar, but if you look at a weekly chart of the dollar, you're going to see that we made a succession of higher lows, and that usually represents a sign of strength. Also, you see the problems already happening in Europe. Markets have not really rolled over dramatically here, but we're starting to see the markets pull back in. So this is the year where I think the dollar will have strength. Going into next year, I think the dollar plummets lower. So my cycles are telling me the dollar should go higher. If you get through that 81 level with some conviction, it should be smooth sailing up to around the 84 level. But like I said, in the near term, you just watch for the dollar to get to and this is the U.S. dollar index futures, the M contract, up to around 80.60, 80.75, maybe 81, and it should stall there, and then we'll have to watch what kind of base it builds from there.
Okay, and the time cycle for this next, should we rally? Do you have any time cycle set up for this thing?
Oh, within the next 4 or 5 months.
Okay, all right, good enough. You wanted to move forward. WYNN is what you wanted to talk about.
Yeah, Wynn Resorts, I want to just talk about that one a little bit. This stock is trading like a Chinese ADR. In fact, if you overlay Wynn Resorts with a chart of Baidu, you're going to see the almost identical price action, the way the stock pivots and moves on a day-to-day basis. So anybody out there trading these casino names, don't really worry about the casinos themselves. Watch the Shanghai market. Last night, the Shanghai market was up, I believe, pretty sizably, well over 1.5%, I think 1.7%. And you'll see Wynn Resorts today is up $2. And when the Shanghai index is down, Wynn Resorts will be down quite a bit. This goes for the same case could be made for MGM and Las Vegas Sands as well. But Wynn Resorts is trading just like a Chinese ADR. That you wouldn't even know that it's a U.S. company. But just watch that chart, and you'll see how that's trading. I just wanted to share that with your listeners today.
Any trading positions you're thinking about with this?
Well, I like Wynn Resorts for a nice bounce. If it got down to around, right now it's at 125, but if it gets down to around the 118 level, yeah, I think there's a play there on the long side at that area. Ultimately, this stock, if it does break down, could go a lot lower. But right now, I think the 118 level looks real attractive, and I think it will get there relatively quickly. Okay,
all right. You also wanted to touch on the gold market, GLD?
Yeah, we've been, as you know, Michael, I'm a gold bug, but I have not been bullish on gold, especially this year. And I just wanted to reiterate to a lot of your listeners that right now, gold is below all the moving averages. It's a little bit in a weak technical position, should go lower, but don't think gold is done. I just want to let everybody know it's not, the bubble hasn't popped. There's no bubble here. It's just a natural correction that needed to be made, and you're going to get a good buying opportunity in the latter part of the year. Right now, there's still very, very good support for the GLD right around the 150 area, maybe 151 in that level.
Okay, you say latter part of the year. Are you talking October or maybe the summer months?
No, latter part of the year. I do mean fourth quarter, October.
Okay, all right, got it. And the equivalent, you said about 150, 151 on the GLD. What do you mean in regards to, say, a futures contract?
Let me see what I have on. I always label my charts. I keep notes on every screen. Let me just punch up my future. I'm going to say 1560, maybe 1550.
Okay, so you think that's where we're pretty much where we're going to base on this?
I think there's a lot of support there. I mean, worst case scenario, I'm seeing 1500. as you know, gold can really move when it gets going. So, I mean, there's always a chance of a little bit lower, I guess. But right now, I don't see that in the near term. But I do think we're going to go test 1550 on the spot, possibly even 1500. But, depending on where we are in time, that could be actually possibly a buying opportunity.
Okay, got it. We'll have to watch it when it gets there. All right, moving forward, GDX.
Yeah, GDX is something I talked about on your show probably, I guess about a month ago or so. I think it was right at the end of February. I was telling your listeners to get out of GDX and to sell with both hands.
And nice call, by the way.
Yeah, it worked out, and it was the right move. I had my subscribers moving out of that as well, and some of them took advantage and shorted silver at that time as well. However, what I wanted to point out is that this is really in an ugly, ugly downtrend at the moment. But I do have some levels for your subscribers to watch for pretty good bounces, and I just wanted to say the 4150 level is a bounce area for GDX, it's already oversold. So if it gets down to 4150. Probably could take that for a week or two. And also, ultimately, I don't see the GDX getting below 35.50. If it does get there, I think you pile in with both hands.
All right, got it. All right, we're going to watch that. And now, in order to be able to actually pull the trigger on these trades, ladies and gentlemen, try not to trade from the show. Actually, get in contact with Nick. Nick, give them a way to reach you so they can watch you pull the trigger on this stuff.
Yeah, you come on over to In the Money Stocks. Check out our website. We offer a free 7-day free trial on our research center, also on our intraday chat room where you can look at our desktop live. You can shoot us an email. You give us a call. We'll be happy to answer each and every one of you. But once again, as Michael said, you'll come over and you'll get our nightly setups. You'll get all of our videos. You'll receive all of our information each and every day. So that really is the best way to approach this market.
Okay, now let's move forward to the broker-dealer index. What are you seeing there?
Yeah, well, the broker-dealer index has been very, very strong as of late. I mean, we've had quite a rally since practically late November. Right now is really the first time we're seeing this roll over, the first time the broker-dealer index has even broken the 20 moving average with some conviction here. So I'm expecting this index to move down towards the $99 level. There you're going to get a pretty decent little bounce. There's actually a gap fill going back to March 7th. So watch broker-dealers. We'll get a little bit of a bounce around that, I'm going to say $99 level, just a pierce of the $100 even number.
Now, does that mean that you're feeling bearish on this and you'd want to short the rally off of that, or you're looking to buy the dip off of that?
Well, what I think now is that the entire market, the S&P 500, and I'll use that as the barometer, that is starting to roll over now, but it's not going to be. You have institutions now that are accustomed to buying the dip, and they believe that the Bernanke put is in place. So this is an area I would look for a bounce play around $99.
Okay, all right. Now we haven't touched on it yet. I know I do want to get a hold of the S&P before you go out, but what about the banking index? What's your thoughts on that?
Well, you could look at J.P. Morgan overall as a banking ETF these days. I think it's finally starting to correct. $40 is still a big area, maybe even the 50-day moving average on J.P. Morgan, which is around 41. There's still going to be a lot of support in that vicinity the first initial time that price trades down to that level. Overall, I do believe that the banks are just having a ton of liquidity thrown into them, and that's the reason for it. But right now they're leading, and I'm not looking to fight the price action here, but I do think JPM is going to correct down to that $40 level. Okay,
got it. Well said. Last but certainly not least, the stock market. Give us your take on that.
Well, the S&P 500 to me looks like it's finally rolling over. I don't expect much today. Last night I called for a flat market overall today, and that's kind of what we're getting. Tomorrow you're going to have the government job number. So basically, in a nutshell, Michael, I'm looking for the S&P to trade down to around the 1350, maybe 1355 area before you get your a decent little bounce. That'll be just a small correction right now. After that point, we'll look for pattern and see if we do form a higher low, and then we would look lower. But the trend is up right now, and you don't want to fight this market. Make sure that if things change or I'm wrong, and this market is still very, very strong despite the lackluster volume.
Okay, the $64 million question. Do you see this as the beginning of a possible wave 4 on this, let's say, the S&P market?
Well, it's always tough to know where you are. Obviously, we're getting out of a wave 3, so I would probably think this would be a potential wave 4 now. So I'm just looking. I'm looking back at the sometimes you got to break this thing into smaller time frames to try to figure it out.
And that's a tough question.
It really is. It really is. But there's a case that can be made that this is wave 5.
Okay, yeah, that's the other. We'll have to find out how we split the hair on this one anyway. But
due to rules of alternation between wave 2 and wave 4, you can make a case that this is wave 5.
Okay, all right. What would be at this point? Because we're going to run out of time. But what would be in regards to price, some kind of critical level for you to say, wave 5? That's right. Here we go. Well,
if we took out 1350 with conviction, I'm going to be pretty sold that it's wave 5, wave 5 completed. So then I think that the S&P would probably trade right back down towards the October 2011 lows rather quickly. But I really need to see that 1350 level just get taken out with conviction.
Well said. All right, I'll tell everybody how to get a hold of you, Nick. Thanks for showing up.
Thank you, Michael. Have a great day and enjoy your holiday.
You too. Everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com. Go there, InTheMoneyStocks.com. Watch this gentleman trade with him over his shoulder, pull the trigger with him, and you can stay on the right side of the market more often than not.